It's a reasonably quiet week this week, and today's a bank holiday in London and New York, but that doesn't mean nothing's happening, and that's why we're here to bring you the latest insight on the week ahead. Joining me on the line is Richard Falkenhall, FX Strategist at SEB in Stockholm. Richard, what are you paying most attention to over the next few days? I'm guessing you'll be keeping a close eye on Sweden and Norway and their upcoming GDP figures.
Working in the Scandinavian region, of course, we have a lot of focus on what's going on in Scandinavia. And we have a few events here, Tuesday and Wednesday, which will be very interesting from a Scandinavian point of view. And that is, of course, the GDP number, the Swedish Q1 GDP number that we will receive on Wednesday morning. That would be important as we expect a fairly weak number for the first quarter this year. Probably we will see the economy pick up a little bit in the second quarter, but this first quarter could be weak, and that could actually be a negative surprise to the markets. That is important because we have the central bank rate decision in early July, and right now it's a bit divided whether the central bank, the Riksbank, will cut rates or not, and we actually expect them to cut rates, and we think this GDP number could sort of support our case here for rate cut in July, which will of course be negative as we see it to the stocky, at least short term. So that will be one important event. From Norway, we'll also have some numbers with the retail sales, and later this week, I should say, we will also have the unemployment rate. And these could also, of course, be key events for the Norwegian central bank. It's been on hold, but the expectations have been sort of moving around sort of a rate cut or not. And we expect them to stay on hold, and we should see fairly okay numbers coming out of Norway, although the economy in Norway has also been a little bit weaker than perhaps widely expected here over the winter and early this year as well.
You said you're anticipating a rate cut or rate cuts of some kind over there. Are we going to see the same kind of historical interest rate measures taken by the likes of the ECB and RBA in Scandinavia?
I guess, especially the Riksbank, if we get a rate cut in July, I think that is slightly similar to what we saw from Australia, where a strong currency is sort of generating very, very low inflation rate, and the Riksbank finally has to sort of respond to that low inflation. When it comes to Norway, it's been more sort of, they have, although they haven't said it explicitly, they have been sort of targeting the NOK exchange rate. They don't want to see its currency become too strong because that will hurt sort of the domestic part of the economy outside the energy sector. So probably Norges Bank will remain on hold, but they will continue to speak in a dovish way going forward anytime you see sort of the Norwegian krona strengthen. So I think this is a global pattern right now where we see some of the smaller central banks which have sort of seen their currencies appreciate a lot over recent years, starting to respond to this and try to prevent further strengthening by using a slightly more dovish monetary policy. So yeah, sure, that's a trend.
Okay, towards the end of the week, we've got housing price index data in the UK, along with GDP and jobless claims data in the US. And importantly, we've got the Euro inflation flash on Friday. What are you anticipating towards the back end of this week?
I think that these sort of numbers that we have out this week shouldn't be able to move the market too much around. I think, of course, we have the Eurozone inflation numbers coming out on Friday, and inflation has been very low in the Eurozone, which also opens up for further stimulus from the ECB, of course, and that could be negative to the euro. Going forward, we expect actually the ECB to cut rates in July again, and for that to happen, I guess we need to see further weakness or low inflation rates, and we expect that to happen. We have a forecast which is for inflation being around the same levels we saw in April, which means below the ECB target actually in year-over-year terms.
Okay, that's all for now. As usual, the Dukascopy TV journalists, along with our team of analysts, will continue to bring you the latest updates and exclusive interviews all week. But until next time, goodbye.